What are you finally making of the kind of rallying we've seen in global markets? Do you think we might hit a pause now that we have all the results of the US stress tests out? Or do you think the rally is unstoppable and it might in fact develop into sustained buying?
It depends on your time horizon. I believe that in the short run, it would make sense to pause and in fact see a correction because the results of the stress test probably will be a buy on the road sell of the fact event, given that they have been so well pre-announced by the government officials. So all of the good news is pretty much priced in now, and it will be natural for markets to come down somewhat. But in the medium to longer term, I'm very convinced that the US economy is about to start expanding again in Q3 and the rest of the world in Q4 or Q1 next year, which would imply that the stock markets should continue powering ahead through the end of the year.
What did you make of the numbers that came out of China as far as industrial production growth was concerned, Dariusz, at about 7.3% growth? You get the sense that the leadership as far as economic recovery in Asia may perhaps not be from China?
I think it will be coming from China, although industrial production itself grew not as fast as people were hoping. This is driven solely through the export sector, where yesterday's trade data showed continued weak external demand. However, the domestic demand in China maintains very strong growth rates. We saw retail sales data today with real retail sales surging almost 17% year on year, approaching levels from the second half of last year. And yesterday we saw fixed asset investments growth accelerate sharply in April as well. So I think that China will indeed continue to lead the recovery, but it will be driven by its domestic sector, while external demand will remain weak, and therefore industrial production itself may not surge as much as some had hoped.
Dariusz, in terms of fund flows, we're seeing them double almost on a week-on-week basis in terms of emerging markets. Yesterday in India, we saw a rally that seems to have largely been fueled by FII money. What's your own sense of valuations across the Asian region, India in particular?
I think that valuations in our region have become sort of much richer over the past 2 months, to the point that it may be quite risky to jump in right now. If I'm correct that a correction is going to take place in the near term. India is sort of in the middle of the BRIC economies in terms of how fast the stock market has moved higher. I should say, together with China, sort of lag behind Brazil and Russia. So some further upside might be possible depending on the election outcome. But I think that by the end of the year, Sensex will only be trading around 14,000. So much of the gains since last year's lows have already happened.
Just taking off from Shruti's earlier question, Dariusz, the rupee has been fairly volatile within about a 1 rupee range between 48.5, 49.5. What's your own take on the way the Indian currency is slated to move against the US dollar and perhaps the yen as well, which has gone to about 96?
Correct. I think that together with other Asian currencies, the Indian currency may see some short-term correction. However, by the end of the year, it will be much stronger, and our forecast is for 46.5 is the US dollar because of continued inflows of foreign portfolio capital and because of improved risk sentiment. So we are going for a pretty substantial appreciation in the second half of this year.
What's your reading on commodities right now, Dariusz? Crude is back up to 60. You think that this extra liquidity that's floating around in the system may continue to fuel a bit more rally in commodities globally as well?
I believe that indeed the second half of this year should see commodities gaining further. Our year-end target for crude, when we did our forecast in December, was 70 to 75. So we still see about 20% upside for WTI. And if indeed we get a convincing recovery in the US economy in the second half of the year, perhaps even somewhat more dramatic increase. In terms of other commodities, I mean, they have all surged by half to actually over 100%, depending which one you're looking at, over the past several months. but they are still substantially down from pre-crisis levels. So upside remains, but again, I would caution that in the near term, I don't think that there is much upside potential. Those gains will probably occur after a relatively imminent correction.
As the devil is in the details, you just used the word convincing rally. Do you think this is just a liquidity-driven rally, or do you think there's some kind of a deeper industrial recovery that's playing out now?
I think both factors are playing a part. Clearly, there is a lot of liquidity in the global financial system. The central banks, in particular the Fed, Bank of England and Bank of Japan, have flooded their money markets with extra cash. And this obviously is positive for any asset class, especially the risky ones. But at the same time, it's very clear that the fall in global economic activity has stopped, and industrial output data from many countries has shown that in month-on-month terms, things have stabilized or actually even begun to move modestly higher. So we don't have the free fall anymore, which reduces the risk premia in all asset classes. And at the same time, investors are hoping that the recovery will come. So assets such as equities and commodities have to reflect that with some anticipation, moving before the data confirms the recovery.
One final question, Dariusz, that's on the industrial production numbers that came out in India yesterday. If you had a chance to take a look at them, they contracted by about 2.3% for the month of March on a year-on-year basis. What's your own reading of the economic story in India at this point?
I was also surprised by how much the industrial production has contracted, especially when compared to what's happening in China. But you know, compared to many other economies, it's actually still a very good reading. And I believe that in the second quarter of this year we will bottom out, and output will grow from there, expanding quite fast in the second half of the year. And the current fiscal year should see GDP growing by 5.5%.
Good speaking with you, Dariusz. Thanks so much for taking time out and joining us today. That's a view coming in.